I gotta tell you, sometimes it is hard not to air drum to these intro songs. Hey, everybody, welcome to the Lund Loop Daily Update for Thursday, August 20th, 2026. Can't believe we're so deep into August. We're about a month away from my favorite season, fall, autumn, whatever you want to call it. Also, about a month away from my birthday. Hint, hint. All right, look, I just want to give you a little heads up if you're a free subscriber. What we do here for the beginning of the daily update is I'll look at the daily action, the intraday action on the SPX. I'll run my mouth on some topic. Like today, we're going to talk about the 100% accurate trading strategy. And then there's a jump, right? That's where we cut off between free subscribers and paid subscribers. After the jump, what I do is I do a top-down look at the markets. So I start with all four of the indexes, and I'm trying to determine where they are in the continuum between risk off to risk on, right? Where are we in that continuum? Then we look at all the sector ETFs to give us a little extra puzzle pieces. Sometimes we look at the indexes and they're somewhat ambiguous or a little bit of a coin flip. And if you go through certain ETFs and you see some of the similar patterns forming up, you go, okay, maybe we're leaning a little bit more risk on, or maybe we're a little risk off. After we do that, I go through 4 watch lists. The first one is the focus watch list, right? These are stocks I'm keeping an eye on because price or volume action has brought them to my attention. Then we've got the daily setups. Those are the names I think have the biggest chance or the best chance to move the biggest in the next 1 to 3 days. Then we've got the active sequence stock. Those are ones that go from the daily setups into what we call an active mode. Those things in the right market environments have the best chance to move the most for the next 1 to 3 weeks. So you got a day trade sort of setups on the green list that can transform over to swing trades on the orange list. And the best case scenario is when they bounce back and forth. So you get something on the daily setups, it triggers, it goes onto the active list, it stays on the active list for 1-2 weeks, sets up again, comes back to the daily setup, triggers, goes back to the active, back, forth, back, forth. When you get a real trending market, you can get names that stay on there for a month or so. And then finally, I've got this new list I started called the considerations. And that's just because so many momentum names will not set up these days. And so those are the names I think are ready to go, although they're not set up on a daily basis, and you need to find an intraday spot. If you need to learn how to find intraday spots and you're a paid subscriber, you can go to the Lund Loop Deconstructing a Trade archive. I've got 100 videos there on everything from trade management to setups and entries to trading psychology to candlestick charting. Or you can hop in our trading room and ask a question of, 400 veterans who've got 10,000 years of combined market knowledge. So that's what we do for the full paid subscribers. Let's get to that first part I was telling you about. Okay, so SPX. We had another week open and we just bounced in this range for a little while. And at some point it looked like we were going to get a reversal and break back above yesterday's low, but then we failed. But we held the opening low and looked like we were going to rally, and then we just rolled over. And then we saw the spread between the 20, the 9, and the 5, and the 20 became the limiter, as it often does on a trend down day. And that's what it ended up being, a trend down day. We closed the day at the very lows. I will say there was a slight bit of relative strength in the Qs, which is odd because they've been, NASDAQ has been the weakest lately. We actually got back up into the bottom of this range. I'm not going to assign too much significance to this, but it did stand out when I was looking at all these different ranges during the day. And we're going to see a little bit of that show up in the daily charts of the indexes. But first, I want to talk about, what did I call it? Sometimes I forget. I'm getting old. I want to talk about the 100% accurate trading strategy. All right. This is a trading strategy that never fails. Here's how it works. It used to work it still kind of works this way, but in the olden days, what would happen is someone would reach out to you. Someone you didn't know, someone that represented themselves as an expert in markets, and they would probably talk about some amazing data analysis they have. Today, maybe it's some sort of AI thing that is 100% accurate. It's always going to throw out a winner, right? So back in the day, you'd get a postcard in the mail. Nowadays, it's maybe you get an email, maybe someone approaches you on social media. And what they say is they say, look, we got this 100% accurate system, and I get it. You don't trust us. We're going to prove it to you. We're going to give you a month of free picks, okay? Just so you can test our system. So what happens is the first week they send you a pick and they say, ABC stock, go long ABC stock. It's going to go up this week. And what do you know? ABC stock goes up. You're like, okay. Next week they go XYZ stock. This is our focus stock this week. This one we think is going to go up for sure. Our computers, our AI, our large language models, whatever they're using, says that's what's going to happen. And sure enough, it does go up. And you're like, wow, this is pretty cool. Third week, they say, hey, AAA stock. We think this is going down this week. We think you should short this one. And wouldn't you know it? AAA goes down. Final week, fourth week, they come out, they say, YYZ. For all you Rush fans out there, YYZ is going to go up. And again, it goes up and you're like, wow, these guys know what they're talking about. So in the fifth week, they say, hey, we've given you a week of picks. We gave you 4 picks, 100% accurate. We want you to have access to our whole system. We'll give you 52 picks a year, one a week. All it costs is $3,000. That's what these services usually ran, $3,000. Or in a variation of that, they'll say, hey, we're willing to invest money for you, right? We know the picks, but we'll invest money. So send us $10,000, $20,000, $25,000, whatever. The following week, the fifth week, depending on the scenario, sometimes you don't get any picks sent to you, or sometimes you get picks sent to you, and what happens is they are no longer 100% accurate. And you say, how could this be? I don't understand. Well, this is how it works. Back in the day, what would happen is they would buy a mailing list, right, of 20,000 people that have expressed interest somehow in financial markets. Maybe they subscribe to the Wall Street Journal, or maybe they subscribe to Fortune, whatever. They buy that 20,000 mailing list. Now it's probably an email list, and they split it in half. And they send half over here and say, XYZ, go short. The other half, XYZ, goes long. And whichever half gets the right pick, they take that in the next week and they split it again, right? So they start with 20,000, they go to 10,000, they go to 5,000. Now they're at 2,500 by the time they're ready to hit the $3,000 a piece offer. Now do the math, 2,500 times 3,000, a lot of money. They get their money, boom, they're gone, right? That's the 100% accurate trading service. So the upshot is, obviously, it doesn't exist. They're gaming the system. But there are people out there today in the markets that act in the same way. Like the market should 100% do what they think it should do. And it's because people have a tendency to want to outsource their responsibility for portfolio management, for risk management, to the other. Now, the other can be one of two things. It can be a person in the form of a guru or an expert, or it can be to an idea, right? It could be an idea that the crowd has adopted about a name. It could be an idea from an expert. It could be an idea or a concept they just made up. And a lot of times that idea is buy every dip, or it will always come back, or give it time, or this is a great product that is eventually going to rule the world and the stock will go back up to where it was. And we've seen this specifically in the AI trade over the last 2-3 months. And it's bizarre because I'll go into these trading rooms, I'll look on FinTwit, and people are screaming, my stock's down again, I'm getting killed, this has been the worst month I've ever had in the market, I'm down for the year. And I'm like, what market are they looking at? Like, what are they doing? And they're acting like they had a right for their stocks to go up perpetually and never go down. And that's not how the market works. That would be 100%, accurate trading strategy. And there is no such thing. you'll see it mostly here. Let's pop over here for a second. Let's go through some of these names, okay? So like, let's just take VIAV, right? This is emblematic of, or you could just look at SMH, right? SMH is really the poster child for what's been going on in these names the past month, basically most of August, right? So these are names that people were conditioned to always buy the dip. And if you started back in 2025, that worked out every single time, right? Every time you got a sell-off, you got a resolution, and the resolution was higher. So when we start selling off here, people are buying these dips. They're buying these dips. They're buying these dips. And guess what? By the time we get the Leopold low, they can't hold on anymore because they're over levered and they blow up. And then what happens? Then the salt into the wound happens. They sell at the lows. We get this aggressive bounce that they think is the return to all-time highs. They think that this is the V recovery because they have a belief, or they've outsourced their risk management to a guru who's telling them that. And what they don't understand is that this is a counter trend rally. That's what it is. It's a counter trend rally. Okay. Now, will this change? It could, right? It could change from a counter trend rally to a move back to the highs, but there's nothing here right now that says that's the case. There's nothing here that says that's the case. These are all former high flyers. Some of them didn't even get a bounce during August, right? Look at these things. They're broken, right? I mean, these things are just breaking down like crazy. And the folks that are in these names think that this is the market right now. Now, let's talk about how some of these names, how you could get in some of these names and say, okay, maybe it makes sense to get back in them. Look at AAOI. Now, this is a tough name. This is a name that's been on our watch list once or twice. It's got a little bit different characteristic than its AI brethren, right? So it had a very aggressive bounce from the Leopold low, 76 to as high as 157. That's a massive bounce, right? Now it's pulling back a little bit, and it has this little reversal bar here right at that gap support. Okay, so this is a low risk entry. What are you risking here? You're risking 130 to 119ish. You're risking $10. Now it seems like a lot, but this is a very aggressive stock. And if you were finding an intraday base, you could cut down that risk even more. But this is a logical spot where if this thing is done going down, this is a spot where it would start going back up again, right? Here's the counter trend rally. Here's a little bit of a pullback. You could argue that, okay, maybe it's going to continue here and it's going to break this downtrend and start going back to highs. You've got gap support here. You got a little reversal bar. Okay, that makes some sense. How about Nebius? Let's take a look at Nebius. Nebius is something that got all the way from 147 back up to 277. 130 point bounce in a month, right? That was a big August bounce, right? Then it sold off, but look what it did. It reversed right here, right off of the all-time high VWAP. It's got a pretty narrow day here, right off the 50. Yes, it's below this level right here, but this thing, okay, this is a spot where you take a shot. 223 to 212. You're risking 11 points or even more if you want to put a stop here or if you find an intraday base. And the idea is like, okay, the sell-off is over. Now it's going to bounce back and go like this. That's how you approach these broken names with a strategy, with a methodology, with a process, with a risk-first process. And if they don't work out, then you're out. Okay, no big deal. But when you outsource your risk management and you outsource your P&L to either a guru or an idea, when you believe in things like 100% profitable trading systems, it sucks because you are ceding any control over your portfolio, your life, and probably your emotional health, right? It means every day you walk into the market and you go, okay, I hope something good happens. and you got no control over it. And if the market rallies for a little bit and your P&L goes up, you feel good. And if it goes down, you feel crappy. How bad is it to let something else or someone else have control of your emotional state, right? That's the worst. So I get it, man. Discipline is hard. Missing out on things because you're focusing on risk, that's hard. Sitting down and doing some technical analysis, that's hard, right? I get it. I'm not saying it's easy, but the trade-off is you get agency. You take control. You can say, hey, guess what? I'm not down 75% in the last 2 months, right? I've got a lot of cash. I'm in names that are winning. I'm in the software names. I'm in names that are up. You can then be the person that goes, who are these people talking about? What market are these people talking about? Anyway, that's what we try to do here every single day. The whole point of the Lund Loop trading community is this is where traders get better. Whether you're a new trader, an experienced trader, there's always room for improvement. I'm always looking for room for where I can improve, right? And so we have a community here and a support system that we've built to help people that want to take agency, want to take control of their P&L, want to take control of their trading, want to take control of their emotional health, and don't want to be dependent on the whims and the ups and downs of the market. So I would highly suggest you consider becoming a paid Lund Loop subscriber. We've got a great community here. It's different than all the other communities out there. I guarantee you it's the best ROI you can do related to the market. So hopefully we see some new subscribers. And now we're going to get to the rest of the daily update. And we will start here with the SPY